Hello, everybody, and today we're going to be talking about what is stock exchange. So, stock exchanges are places where securities, such as stocks and bonds, are traded. They allow investors to buy and sell shares of a company among each other. This can take place in a physical location or an electronic trading platform. When a business issues shares, the owners of these new shares might want to sell their stakes someday. Without a stock exchange, these owners would have to find a buyer by going to friends, family, or community members. The exchange makes it easier to find a buyer in what is known as the secondary market. The main purpose of stock exchanges is to trade stocks. Before you trade a stock, you must first identify whether you want to buy a stock or sell a stock. For example, let's say there's an investor, someone who has a share of a business, and they want to sell a stock. They would first typically contact their stockbroker. A stockbroker is a professional trader who buys and sells shares on behalf of their clients. The investor would contact their stockbroker to ask them to sell the stock. The order to sell the stock is then placed on the stock exchange by the broker. And these stocks are sold at the current stock price. This price is known as the market price of the stock. Now, this broker has a sell order, and they would meet with a broker who has a buy order to make the trade. Once the stock trade is made, ownership of the securities would need to be transferred. This is accomplished on the settlement date, which is typically 3 business days after the trade date. This date is when the buyer pays money to the seller and when ownership of the stock is officially transferred to the buyer. Some examples of stock exchange are the New York Stock Exchange, the Shanghai Stock Exchange, and Euronext.